Hey guys, so welcome to today's coronavirus and property investors. So I'm back into live stream now, and hopefully I've got the issue sorted. I've got a direct line in now, a dedicated line. So yeah, hopefully we get back on to be able to do live because I had to drop it there for a while because it was just too stop-starty. I'm sure everybody, in fact everyone I'm speaking to, is having problems with the internet. But no, so today is the disguised cause of the recession that we're currently in or going to be in, which officially I guess will start July 1st. Due to corporate debt and not coronavirus. And I think this is really important because I think it's all good to say coronavirus caused it and blame it on coronavirus. It's a bit like Trump, you know. I mean, and I take the piss out of him, but he deserves everything he gets, to be fair. But bottom line is that there is, you know, coronavirus isn't the reason for the global recession that we're going to go into. It is one of the causes, correct, you know, and it is a reason for the lockdown and that. But actually, there's been a lot of systemic problems and the fundamentals leading to this. So there's been a lot of talk, and even myself, you know, has been, mentioning that, you know, the recession, we're looking to head into a recession soon, you know, coming up, you know, and really, you know, I was thinking May, June 2021, so next year. So I thought we had this year, but what coronavirus done has brought it forward. Now, there's always a scapegoat. There's always a name. There's always a label that you place on a recession, whether it be oil crisis, oil shock, savings and loan scandal, dot-com bubble, the subprime mortgage crisis, or whatever it is. There's a name for it. Even now they're calling it the Great Lockdown. You know, which I thought was quite interesting as I looked around just the internet. The Great Lockdown, wow, like the Great Depression. And you know what? We'll see which one prevails, because often there's lots of names that come out of it, and then one prevails. But what's probably unlikely to come out is corporate debt as being the reason. A lot of people have been talking about corporate debt. A lot of people have been thinking that's going to be the reason for the recession. And the bottom line is that, you know, coronavirus has come and probably bailed it out. You know, you see, the world has a corporate debt problem, yeah, and I've always said it's going to cause the next recession for quite some time. I've said Trump is going to be big because obviously the largest economy in the world, US. Trump leading that. Trump with all his, trade wars and things like this have all been going into it. But also the big thing has been, since the previous recession, the global financial crisis, to now, we've been investing heaps of money, really cheap money, giving out debt, all over the place. And, what we've found is that the bubble didn't deflate last time. What happened was we propped it up by giving all these big corporations money, which is exactly what's happening this time. Now, with the savers this time, that's probably a topic for another thing. But, look, the bottom line is that, if you look at corporate debt in the US, yeah, and obviously being the largest economy, we can look at that and sort of, it looks at the whole world, because corporate debt in the US, $10 trillion. That's 47% of the entire economy, the GDP, yeah? That's massive. It's never been. And in actual fact, since 2008, the scale has just been going up like that, which is pretty phenomenal. You've then got worldwide 30 trillion. Now, if you think about that, the US is 10, which is a third of all corporate debt, okay? And the way that's tracked is not actually even all corporate debt, because there's some non-financial and things like that, but anyway, we won't get into that. But yeah, bottom line is, we have been, if you look at the issue, in 2008 global financial crisis, we didn't address the issue, okay? And we didn't really deflate the bubble that was there. We did to a degree, and certainly the housing bubble deflated, but a lot of corporate and a lot of other financial issues that would normally have dealt with then didn't get dealt with. And all we did was we gave cheap money away, and that cheap money allowed us to effectively fund pseudo growth, okay? It probably wasn't real growth. It was, let's borrow money and let's stimulate, and grow the economy. And people say there's been stock buybacks and things like that, and that is true. A lot of that money has gone to stock buybacks, which is great for the shareholders and the owners, and the mega wealthy people who own that, but not necessarily for the companies. And so there's a lot of problems. And I was looking at the stats the other day, and AT&T, GM, Ford, Dell, and I've forgotten the other one that was there. They're the biggest holders of corporate debt by far in America. Like, it is amazing how much money they've got, and they've been giving out bailouts, and it's amazing. But anyway, look, bottom line is we didn't solve the problems last time, and so we're going to have to pay for them this time. But maybe not, because maybe the economy's turned. But the problem is nobody has a crystal ball, okay? And it doesn't matter who you read. I mean, I watch all sorts of different economists around the world, and I listen to what they're saying. I listen to the data, and I go to the source data, and I sort of put it all together and have a look at that, and sort of try and come up with my own thing. And when I come up with my own thing, the interesting thing is that I find is that there is no consensus, yeah? And a guy who's absolutely certain this has happened gets it wrong. But then they'll explain why they got it wrong, because their model, or their assumptions were incorrect. And that's the problem here, is that what's the correct model? We don't have one, yeah? Nobody has one. So yes, we can say the general trend, and that's and I've said that for ages with property. You can't pick the exact moment, but you can track the trend, yeah? And so you invest based on the trends, and you pull out based on the trends, and you do, change your strategy based on trends. And when you do that, that's generally good enough to see you through, yeah? Look, the real issue here is, there's so much debt that needs to be refinanced. Now, it needs to be refinanced when we're going to be in recession. Because, look, and I'll make clarity of this, because I think a lot of people think that I said that we weren't going to have a recession. I think we are going to have a recession this year in 2020. And I think it'll be in the UK a relatively short one. I think other countries will have a relatively deep one. I think the US is going to get absolutely slammed. Those unemployment rate is just, wow, how are they going to deal with this? They are going to have to do some serious thing, and that's going to attack the dollar. And there's a whole range of issues around that. But the bottom line is, if you have to refinance your debt, which is already at super cheap rates, yeah, all of a sudden now you're at risk. So what happens is that rate increases, and all of a sudden it's a lot harder, a lot more expensive, which now if you refinance that debt at a higher rate, you haven't got that money now because you're putting that money out rather than hiring new people and doing things. So that's going to slow the global economy down, all right? And that also, so the problem is the more we get into this, the more headwinds we get. Now, you do have, can we survive? Look, we've got the central banks, the Fed and the Bank of England and Reserve Bank of Australia and all these sort of guys, Bank of Canada, and all these guys who basically can help out. Now, normally what they would do is what's called monetary policy, raise and lower interest rates. Well, we can't do that. That's effectively a big gun with no ammunition to fire it, okay, because we've already spent the ammunition. Quantitative easing, we have got that, but we've been doing that for the last 10 years. So is that going to be worthwhile to continue? We'll see. Fiscal policy. And I think this recession, this crisis is going to be dealt with via fiscal policy, government taxation and spending. And in this case, there's not really the choice to tax, because sometimes you can increase taxes here and spend them here. The reality is this one is going to be all about spending. And so that means more debt. Not corporate debt necessarily, but it will be corporate debt, because obviously with things like the CBILS program, this coronavirus business interruption loan scheme, in the UK and the various schemes all around the world, whether you're in Australia, they have one, and wherever it is, what you're going to find is that corporate debt is going to go up at the same time as we've already got so much corporate debt. But there's going to be government debt as well, massive government debt. Now, what is that going to mean? Well, that's going to mean that if they want to keep the money supply increasing and flowing and going, then we're going to have to take on more debt, which means more inflation to pay that off. Yeah, frankly, that's pretty full on. But to be fair, we've had what I would say is deflation. I mean, if you look at the UK property market, which obviously I'm involved in, really we've had no growth there since 2016. Really, the whole of Brexit, we've had virtually nothing happening, and that is in London, and that's pretty much anywhere. There's pockets in that, but let's not get into that. The overall hasn't grown. We've been dead flat, okay? That, I think, will help the UK. It's a gift from the gods, if you like, because basically we haven't had that amount of growth. But even before that, post-GFC, the global financial crisis, 2008, 2009, we haven't had, a lot of places haven't had any growth. And now if prices drop further, during this recession, which they can. But it's interesting. It's the real question is, can we get out of this? I think the answer is yes. Can we get out of the recession, have a recession? No. I think July 1st is going to be right. All the world is in you just don't close down the economies like that and then ramp them back up straight away. Even China, which purports and looks like it's got back in, actually, if the engines or if the consumers that buy from them don't quick, then you might see that actually they're bouncing on the bottom too. So, we don't have an answer to this, but I think it's going to be government-led, where government takes borrowing causes inflation. Inflation is going to, I'm saying 3 to 4, 5%, which is well above target. Remember our 2% target, which is generally for most economies, that's where we're aiming at. So, we'll see. There's going to be a lot of borrowing by government. It's going to be a lot of, and this is, I think, the key to this. In 2008, 2009, we had direct money injected in the form of stimulus to corporations. And what did they do? They bought back shares, they feathered their own nests. Trickle-down economics did not work whatsoever. It didn't trickle down to the economy. It didn't stimulate the economy. What it did was make those shareholders richer. And that's why I love Chamath, ex-Facebook guy, talks about let them go, let them die, let them fail. Because actually, what we need to do is stimulate into the individuals. And if we do that, and we do that well, then let's see what happens. It's it's a massive social experiment. It's not been done before, but I think it is worthwhile. All right, guys. So no answers, unfortunately, no real answers, because this is bigger than any one person or economist or any person. Nobody really knows. I think the US is going to get slammed because of the way that their whole approach to the coronavirus and their whole approach to their citizens and the whole approach to stimulating. I think places like UK and even Australia now. I was critical of Australia at the start, but they're looking a lot better. New Zealand, wow, New Zealand's response for their stimulus, huge. My concern is maybe they've gone a bit too far, but we'll see. Good on Jacinta. She's definitely showing leadership. But anyway, so we'll see. Different places, different things. Singapore, Hong Kong, South Korea, they're all looking pretty good still, even though they've still got the coronavirus. They haven't totally stamped it out. But we'll see what happens. All right, guys, have a great day. Live with passion, and remember, stay safe, stay healthy, and stay at home. All right, see you. Bye.